Bank stocks are dying. The stock market indexes are freaking ripping. AMC stock in the green by almost 4% on the day. Pretty weird dynamic we have going on, and that's exactly that. Now, we're going to get into everything you guys need to know about AMC today, what is happening, but as well as that in the broad markets, because this is going to be the biggest week so far of 2023, and it's going to set direct policy for 2023. The Fed is really going to let us have it coming on Wednesday. And based off of what happens from now until then, does have some big implications for what could possibly be said and where the markets could go from here. And I would just want to summarize kind of my expectations for Wednesday as well. So we're going to get into it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section if you have not already. Now, this is First Republic Bank. Looks like it's not going to be around that much longer. After the major banks, the largest financial institutions in the world, in America more specifically, came together, deposited $30 billion to First Republic. That was last week, I believe on Thursday or Friday. Did not work. You opened today down 47%. Jamie Dimon leading a series of negotiations to try to get a conversion from, rather than just being these large banks depositing $30 billion, essentially giving First Republic $30 billion. Now, obviously, the money's going to come from somewhere. It's just a capital injection. We have no news whether who would take what stake or any of that. I think it's far too soon to even comment on that. They're just worried about trying to save First Republic. Now, First Republic told us they had $34 billion in cash. That means on top of $30 billion that was just injected to the company, they should have about $60 to $65 billion worth of capital. If that's not enough to save this bank, we have some massive issues. Okay, that's number one. Banking crisis is not getting better. And that's a problem because the Fed, the FDIC, the Treasury has already reassured that deposits are safe. And if that didn't solve the problem, which it doesn't look like it did, you're going to need drastic implementation of differing policies, right? It's obviously not working. We need something else. Fed Jerome Powell might just give us that on Wednesday. If the Fed were to cut interest rates, I think you get a bullish reaction initially. By the end of the day, if not most certainly over the next following days, you get a very bearish reaction, because when the Fed freaks out is typically when you should freak out. Now, you were seeing the signs that the markets are starting to freak out because of the 2 and 10-year yield curve, right? And you got to think about this more logically. When the yield curve is inverted, like it was inverted about 1% in early May before this banking crisis started happening, that means short-term bond yields are paying you out more than long-term bond yields. Well, that's definitely not telling you a recession is around the corner, right? Because yields tend to fall during a recession. It tells you investors are more concerned about the Fed raising rates and inflation. Now, obviously, eventually those lead to recessions historically. But in the near term, the markets weren't too concerned about that in early March. It was more so inflation and the Fed. Well, now investors have started to buy the 2-year bonds, meaning they're more fearful about a recession, and they have driven down the yields on those 2-year bonds. So right now the markets are saying the Fed will have to cut rates soon. At the very least, they cannot continue to raise rates anymore. So that's where you get into this dilemma where the markets are telling you this, the bond market specifically is telling you that, and inflation is 6%. You have not been in this kind of situation where banks were failing with 6% inflation. You have not been there. 2008, banks failed. Inflation wasn't 6%. The federal funds rate was 5.25%. They just cut rates. Inflation wasn't a problem then. Well, now inflation is a problem. So this is going to be, as some analysts, some investors have said, the trickiest Fed policy meeting in well over 40 years. I mean, this might be the trickiest Fed meeting of all time. It's not just clear cut. We don't ultimately know what the Fed is going to do. We don't know how bad this liquidity problem might be at these banks. And we just don't know a lot, right? We don't know what the Fed's plan is going to be. So it's very hard to be bullish or bearish as of right now. If I were to imagine Fed's going to come out, they're going to give us 25 basis points. And they are going to be the most dovish dove you have heard in the last 2 years. They're going to say, if anything else happens, we're coming to the rescue. We will be fine. That's essentially what we're going to hear. At least in my personal opinion. That's the only way the Fed can really come out, get the job done, to raise rates 25 basis points, and to not have a total capitulation kind of reaction in the markets. Now, if the Fed pauses, that might actually be worse than the Fed raising. And that is because when the Fed pauses, when the Fed freaks, you should probably freak out. So, long story short, I don't really think there is a good outcome there. And when there's not usually a good outcome, it tends to be bearish for equities, for the markets. And those are really the biggest things happening today. On top of that, $17 billion of pretty much tier 2 bonds with Credit Suisse going belly up. They're not getting any payout from this. Stockholders are going to get paid out, but not bondholders. That has a lot of investors over in Europe very angry, very, very angry at this whole buyout worth $3.2 billion. For context, $17 billion of bonds are going to zero with Credit Suisse alone. That's a lot. That's over 5 times the buyout price that are going BK. Not very good as far as the whole liquidity scene as well, the liquidity crisis. Now, we need to get more information on First Republic. Now, says JP Morgan advising First Republic on strategic alternatives, including a capital raise. Sources say. Guys, I try not to laugh, but at this point, it looks like it's over. Now, how do the markets react to that? Well, the markets are up today. First Republic down almost 50%. If First Republic is the last bank to go, then maybe we can get through this crisis. If not, then you got a problem. If it's First Republic and then it's Western Alliance or it's some other bank, then you got an even bigger problem. And I think that would force the Fed's hand here. One would say if First Republic fails, it forces the Fed's hand. That's how uncertain this market is. And that's why there's going to be so much volatility heading into Wednesday at 2 p.m. You're going to get the FOMC statement. You're also going to get the dot plot. That's going to be the first initial reaction in the markets. Now, the first reaction is usually not the right reaction. In other words, if the markets usually fall off of the first statement, they tend to rally once Fed Jerome Powell starts to speak at 2:30. But this time you have the dot plot. And if there's any standout changes, if Fed officials start to expect higher inflation, which I doubt that's the case after these banks have failed, if the Fed governors start to expect higher terminal rates, which I doubt possible, or if these Fed governors start to expect more rate cuts, that's really going to be the key, because rate cuts happen because of, one, financial instability like we're seeing now. That's an obvious here. And then economic activity slowing down, right? Leading to a recession ultimately. So that's really going to be the big thing that I want to watch coming on Wednesday. Now, tomorrow, probably going to be a pretty docile day in the markets unless we get new information. And we're going to be subject to change here. Now, just a weird day on Wall Street, guys. So weird. Russell 2000 is up 1%. NASDAQ up 0.23%. And the S&P 500 is up 0.76%. The Dow is up 1%. To see the Dow and the Russell 2000 up about the same, and to see the S&P and the NASDAQ underperforming, and the VIX is down almost 5% today, doesn't make a whole lot of sense to me. The Dow and the Russell, those don't tend to be too correlated, right? NASDAQ and Russell, I can see that a little more. S&P, Dow, I can see that a little more too. or even the S&P and the Nasdaq. I could see that, right? Not the Russell and the Dow. So people are very confused right here, and it's going to lead to a lot of volatility for the rest of this week, as well as for AMC stock. If we take a look at AMC is up about 3.5% at the time of recording this video, obviously well outperforming a lot of other stocks on the markets, and I think this might only just be the start of a bounce within AMC. We'll talk about it once we get to the technicals a little bit more, but you are in this bottoming out process, which is a very good sign. If we take a look at the live short interest of free float, that is at 24.24% here today. 125.15 million shares that are currently sold short. Cost bar average of 267.21%. Cost bar max 359%, and cost bar minimum 0.59%. This cost bar minimum number tends to be very volatile. It tends to be very incorrect, so I wouldn't pay mind to it really at all. What I like to pay attention to a little bit more is the Interactive Brokers numbers, which are in a range of 170% today to 130%. It's been very volatile with the cost of our rates as well. So that is just going to show, if I have not been clear already, I'll be even more clear here in this video. There's going to be a lot of volatility. There's going to be a lot of ups and downs with AMC. And I think at this point, we're really waiting to see how more investors feel about this situation. Are more hedge funds calling this a home run kind of trade like they were before the litigation started? That the court date is not going to hold up, that the court's going to reject this? Or how are people feeling about this? We have not gotten any updates, and it's really putting a lot of uncertainty around what is going to happen. So when there's uncertainty, people don't really like to move around all too much, besides maybe sell some things, right? And that's exactly what you're seeing happening with the banks. Make sure to watch the next video that is coming out today about the margin calls, forced loan recalls, as well as the 2023 recession. I think that is a very important video that everyone watches. Now, moving on to the option activity, 16 orders so far have been placed on AMC, worth $1.53 million, positive order value of 4%. Something else that I do want to point out as well is going to be earnings. We do have some company earnings this week. GameStop, that's going to be a pretty big one, obviously, for AMC. Before we do that, I do want to look at the FTD numbers just so everyone is on the same page. We'll do this very, very quickly. Today is March 20th. That means you had about 7.3 million FTDs come due. Tomorrow is going to be March 21st. That means you're going to have about 12 million FTDs coming due. On Wednesday, Fed Jerome Powell Day, about 10 million FTDs that come due. Thursday, about 11 million FTDs that come due. And on Friday, about 10 million FTDs that will also come due. So that should help provide you a little bit more stability. But again, it's hard to say when things are this volatile. Now, taking a look at the Fed rate monitor tool, the probability of a pause went up a little bit today compared to earlier. If you watched earlier's video, I think it was at a 25% chance of a pause. Now it's at a 29% chance of a pause. So not too much, but even one headline here could totally flip these odds, and whatever is over 50% is what the Fed is going to do. That's why you want to watch this very, very closely. 70.9% chance so far of a 25 basis point rate hike coming on Wednesday. That is the biggest thing. Wednesday is the key to this whole week. Wednesday is going to make this week very good or very bad very quickly. And I think that's very important that you guys know, right? Because it's going to affect your portfolios. It's going to affect AMC. It's going to affect everything, especially since we have the dot plot. This is not just a normal Fed meeting. You get a new summary of economic projections. That's key. Now, as far as earnings today and after hours, you're going to get some pharmaceutical companies, really nothing that's going to move the markets. Tomorrow in pre-market, again, a lot of oh, that's interesting. A lot of pharmaceutical companies, but you do have Canadian Solar and Tencent Music Entertainment. Again, not companies that are going to move the markets. Tuesday and after hours, that's where things get interesting. So you have Nike, Array Technologies, and GameStop. Nike is going to be big for the overall state of the consumer. Are they still going out and buying things. Nike is a pretty important bellwether kind of company for the economy. So if they have bad earnings, it's not going to look good for the markets or, like I said, the state of the consumer. GameStop, you guys know why that's important. It will affect AMC. It will move the quote-unquote meme stocks. As far as that, there's not too much else actually for earnings for this week. You do have, I will say, Wednesday after hours, Chewy, KB Homes. That's going to be a big one. The home builders. What do they say about the current environment? You do have General Mills as well Thursday pre-market, but that is about it. If you take a look at, this is First Republic, guys, just terrible, so bad. You were at $21 at one point today once the market started opening. As soon as you heard about capital injection and First Republic needing more money, the stock got obliterated, down 47.5% at the time of recording this video. Not good. AMC up 3.5%. Looks like you're in a bottoming process. You're in a bottoming formation, so that is definitely a good thing. Volume has been pretty low with the stock, so you want to see how the stock does react on a higher volume day. I think that gives you more insight than these low volume days. And after all, you're pretty close to breaking out again above this long-term downtrend, this resistance level. It looks like you're finding more resistance now at this level. So we need to break above that. Right now, that's currently going to be roughly where we are right now, about $4.35 per share. So a couple cents higher, you're going to break out above this major line again that we have not really been able to break above for a very long time, besides what we've seen recently, which ultimately got rejected. So there you have that. I already went over the price prediction for this week, so I'm not going to rehash all of that information. Go ahead, watch that last video. If you want to be a part of it, the Sunday video, that's when we always do the price predictions and go over a little bit more of the technicals here. But long story short, looks like you're in a bottoming process. There's going to be a lot of volatility for the rest of this week, especially on Wednesday. Volatility just means money. It means money to be made. If you guys want to come join the trading community, link down below in the description of this video. Stay calm out there, guys. I think it's only just the beginning. With that being said, I will see you in the next one.